I think the silver miners, the gold and silver miners both, I think are going to do very well here in the next 6 months.
David, when we think about the, going into this final top here, so let's just take that time frame in particular here. What do you see as the reaction from, let's say, gold and Bitcoin, for example? These are assets that are very tied to, let's say, interest rates, to confidence in the market. How do you think they react going into that top?
Yeah, so going into the top, I'm calling for gold to go to 4,000. Okay. We rose from 2,500 in 9 months, I think. Maybe it was less than that. We went from 2,500 to 3,500, so rose 1,000 points. And then we've spent the last 3 months consolidating that gain. I think you're very close to a liftoff in gold again that could take it to 4,000 in that same, certainly this year. Gold might go beyond the stock market top because the top can build for a few months. So I'm saying you probably see 4,000 gold by the end of this year. Silver, same story. It took a long time to get going, but silver just today, I think, is at a 14-year high. It surpassed highs in 2011. Not the high of 2011, but that was the last time it was at this level. So I think silver is getting going, and as I said, I think it can go to 75 this year. Then in the bust, I think almost all assets other than treasuries get hit, and I think silver is a much more cyclical metal than is gold. So I'm thinking that'll be more volatile to the downside. So you could even see silver, if the stock market's down 80%, silver might be down 70%. Who knows? But from 75 to 70, down 70% is, what is that? Probably 2,200. So, 2,200. So it's still, it's not down at 500 or 1,000 or anything, and gold probably doesn't lose more than 50%, maybe 40%, who knows, because it's more of a run to safety metal. People do use it for some defense purposes, but if you go to 4,000 and you correct 50%, you're back to 2,000, right? So, and that would make sense. Or close to that, because that was the breakout. We broke above 2,100, and then that was where we took off. So I could see that. So as I say to people, those who think you're real believers in the long-term story in metals, and I am. If you buy and hold them, you might not be a very happy camper next year. Because those are pretty big swings. On the other hand, there's a huge story on the other side of that. So everybody has to make that decision. But I think, the market's going to be down 80. These things will probably be down less than that, but still be down big.
David, as we think about, let's say, the proxies to the gold or silver price here, and especially if we see, $4,000 gold and $75 silver, what does that do you think to the mining sector going into this top as well?
The miners are finally starting to catch up. They've lagged for a long time. They frustrated a lot of investors. I think you're in for a pretty good run here. Actually, I raised my GDX target. It had been 65, and I just think there's more runway ahead, so I raised 75, and I'm not sure that's high enough. My GDXJ target was 100. I kept it there because there's still a ways to go. That probably could exceed that. My SIL, which is large cap silvers, was 75. I left it at 75. And same thing with SILJ. I have a 35 target. That's the farthest one away. It still would need to go up more than two times from here. And I left it there. But I think the silver miners, gold and silver miners both, I think are going to do very well here in the next 6 months.
David, I want to go back to talking a little bit about let's say the structure of this global bust. You mentioned the quadrillions in derivatives, and considering the amount of basically the rest of the world that is invested in not only US dollars but also US assets like the stock market, do you think that is what really drives the rest of the world into this global bust alongside, let's say, the US?
Yeah, I'm not sure. It's you look at Europe, for example. I mean, we get frustrated with both the U.S. and Canada, and probably more so in Canada, but we get frustrated with the socialistic policies here. And yet you go over to Europe and it's far worse. And the whole concept of bringing the continent together under the EU and then forcing policies on all of them. Obviously, the UK kind of pulled away from that. I think Italy would love to pull away from that, probably Spain too. But it has left, if we have imbalances and excesses here and lack of productivity, et cetera, they have it 10 times worse over there. So I think there's a lot of 2008-9 created a lot of fragility. We've come out of that. We printed our way out of it, et cetera, but didn't take away some of the things, underlying things that didn't get fixed. And then we got hit by the pandemic. And I keep arguing that there's fragility in the system. Look at the fragility in terms of energy policy in Europe. I mean, we dodged a bullet there for a little while. It was, there was a dire story for a while where you didn't know if they'd have energy for the winter, et cetera. There's still a problem there, right? I mean, their policies have led to a real problem. I think there's an awful lot of people living kind of just hand to mouth. Certainly there are in the U.S., and I think there are probably even more so over in Canada, even though they have this so-called safety net and everything. You're running out of resources. You can't keep pretending that you can do things so inefficiently and it doesn't lead to excesses that lead to a bust. So I think, and you can say the same thing. I mean, China covers up a lot of their problems, but they've got big problems right now. Probably the one that really, from a leverage standpoint, is the scariest is Japan, right? I mean, they pursued this policy where they could have their cake and eat it too and keep interest rates at zero for far longer than anybody else did. And they, you kept wondering when that was going to come to an end. Monetary theory is still real. And all of a sudden now you're seeing rates are pushing up, inflation's pushing up, and they've got a far more leveraged system because of the game they played for a couple decades. And so I think during the bust, that's one of the wild cards is if rates start moving up there and they can't control them, what do? I mean, they're out of answers. And they're going to have to. Everybody talks about modern monetary theory and yield curve control. What they didn't live through, that I lived through certainly in the early 80s, is once inflation breaks out, you don't have the printing press. You don't have the control that you have when everything's kind of, inflation's kind of contained. And that's really my story for the world and for the U.S. in the 2030s, but it could be the story for Japan in this downturn.
Mm-hmm.